we are less than 2 weeks away from the May Fed meeting, and all signs pointing towards the first 50 basis point hike since 2000. As Jared mentioned, Brian Cheung covers the Fed for us. He has yet another indication of what's to come. Hey there, brother. What did you hear?
Hey, Dave, I'm here outside the Federal Reserve Bank of San Francisco. A very busy Thursday of chatter from major Fed officials, obviously tuned in to the IMF commentary from Federal Reserve Chairman Jerome Powell, where he described the labor market as unsustainably hot and said that a 50 basis point rate hike is certainly on the table for the Fed's next meeting. That's going to be May 3rd and May 4th. But I had the chance to sit down live here on site with Federal Reserve Bank of San Francisco President Mary Daly, who similarly said that she could see the case for, quote, expeditiously moving interest rates higher. Take a listen to our conversation from earlier this morning.
We have to get to 2.5 if we aim for that. And I'm part of a committee, so we haven't deliberated on all of that yet, but that's my view. If you get to 2.5 by the end of the year, then you need to, make up that difference of 2 percentage points over the course of the remaining meetings. And so we will likely be taking a 50 basis point increase in a couple of the meetings, also starting our balance sheet reduction program. And those things are appropriate policy because Americans want relief from inflation, and we will do our part, which is to bring demand back in balance to the extent we can with supply.
And again, that 2.5% that she was talking about at the beginning, the Fed's a long way from that. Right now, the Fed is targeting interest rates between 0.25 and 0.5%, which explains why the Fed might have to do what I'm calling that king-size bump of 50 basis points in the next meeting. Again, that still needs to be deliberated, but the San Francisco Fed president saying she supports that move, at least for right now. Keep in mind, we're going into a Fed blackout period beginning this weekend. So for the next 9 days leading up until that meeting on May 4th, we're not going to get any more Fed commentary. So this is likely the last commentary that we are going to be getting. And then one last point I want to leave you with before I finish up here, going to be some changing faces on the committee of the Federal Reserve. And that is because the announcement dropping from the Chicago Fed earlier today that Charlie Evans, the president there, will be stepping down as the head of that bank effective early 2023. This is because of the statutory limitations on how long a Fed bank president can remain in that role, which means we'll have a few new faces on the FOMC come next year. You'll have to remember that we're getting a new Boston Fed president effective July this year, and then the Dallas Fed still looking for a replacement after the departure of Robert Kaplan last year. Dave?